Form 4797 is for reporting sales of business property. By its title, you can see that it applies only to those tax returns that involve a business. That in itself narrows the number of times you'll need to worry about this form. Furthermore, it's only for when business assets, both tangible depreciable assets and real property, are sold. When there has been a sale of tangible business property, the gain or loss is reported on Form 4797. This form is divided into 4 parts. Part 4 is unusual. To determine which part you use, if it is non-farm related, you only need to know 2 things about the property that was sold. How long did the business hold the property, and did the business have a gain or loss on the sale? If the business property was held for less than 1 year, the gain or loss is reported in Part 2. If the property was held for more than 12 months and there was a gain on the property, you'll use Part 3 and almost always treat it as a Section 1245 or 1250 gain, depending upon the type of property. Land is never depreciated, and the sale of land is reported in Part 1. If you have a sale of property that was held more than 12 months for which there was a loss, or if your client is selling land, you'll use Part 1. Incidentally, Part 1 is the most commonly used section of the form. Once you've determined where to begin, the line-by-line instructions will lead you through the calculations in completing the form and will indicate when to transfer the information onto the 1040 return.